The U.S. earnings season carries on. Big tech reporting this week, and a majority of S&P 500 companies beating expectations so far. Among Canadian stocks, two big gainers today, Cameco and Celestica. For more on the stocks and market action, let's go to Diana Avigdor, portfolio manager, head of trading at Barometer Capital Management. Thanks for joining us today.
Thank you, Marilla, for having me.
We have Alphabet, Meta reporting tomorrow. Do you expect that AI capex to continue to grow?
You know, you were talking about earnings, and yes, they have been very good so far, but Mag 5 out of 7 are going to report this week, and it's going to be important how they perform. It's going to be a big directional driver of the broader market, for sure. Post last week's unwind, their collective relative underperformance in second quarter makes the bar for the group seem particularly low. The street is looking for a deceleration in earnings growth for the Mag 7. You're asking about the capex spend. We're going to have to see. There really has been quite a lot of joint ventures and agreements to spend over the last quarter, so we'll see how that comes out. But certainly, consensus sees them growing around 14% in this quarter, which is a lot less than what they used to come in at, which was about 30%. So everybody knows that their earnings growth is going to come down a little bit. The question is how much, and cutting it in half might not be such a high bar to beat. So we'll see.
Okay. Amazon, as you mentioned, one of them reporting on Thursday and announced layoffs today, 14,000 job cuts in the corporate side of the business. Should we expect this kind of thing from the other tech giants as well, as they use AI, adopt AI to push efficiency?
That's a great question and possible. That is something that everybody's watching. We've seen a little bit of layoffs in the U.S. from other large companies. Certainly, this whole year, we would have had things to sell the market on, but it seems to power ahead on earnings. Unemployment, which we don't have a lot of data now that the government is shut for so many weeks, is not showing us direction. However, we do still have liquidity in the system. We do have a fiscal impulse. Now we have a monetary impulse coming in. So I think that that's going to help. We have central banks coming out tomorrow. Fed expected to cut a quarter point. Bank of Canada expected to cut a quarter point, which should help ease further financial conditions. So we'll see when we see data on the unemployment side. Certainly, if it starts inching up, that would be a worry.
So one of your stock picks, I know, is the uranium producer refiner Cameco. And of course, that company surged today on news of an agreement with Brookfield and the U.S. government to build out nuclear plants in the U.S. Would you buy in at this point? Because it shot up more than, at one point, it's a 27% up. It's come down a little bit on the day. But would you buy in at the point it is at now?
Yes. So it's up 20+% today, but it's up 100% year to date. And we could have said this throughout the whole year. Look, it's a situation that it continues to be a theme in the market. You know, the $80 billion number that is being cited here as being the dollar amount that the government wants to spend in nuclear power build out. It's 20 times Westinghouse's regular revenue, and Cameco owns 49% of this entity. What this also brings forth is the possibility of a Westinghouse IPO carve-out at some point in the future, which would really be a great unlocking of value catalyst to the stock. But other than that, the AI drive and the push to electrification and how how this whole thing is going to be funded and pushed through. This is a theme that I think probably continues back and forth for the next several years.
Okay, let's get to another big gainer today, which you like as well, Celestica. What was your takeaway from the earnings from Celestica?
You know, Celestica has done very well lately, just like, you know, this is our Canadian tech sector. And here are the numbers in growth percentage terms. Its EPS was up 52%. Its revenue was up 28%. And connectivity and cloud solutions were up 43%. As long as this AI and build out continues, they cited demand from the hyperscalers, which is the guys that provide cloud services en masse. They mentioned that demand from that sector was very, very good. So I think that you have no choice but to continue. You hold it, continue. This is certainly one of the sectors that is doing well. The interesting thing in the market, just globally too, has been that gold has rallied up so much, but so has the market. That doesn't happen all the time in tandem. Here it does, so it makes for a pretty special market.
Okay, let's get to your third pick, which is Power Corporation of Canada. Wealthsimple is under that. They just did some raise, $750 million to push them to a $10 billion valuation. Tell me what else you see driving the stock.
Power. First of all, it's a strong company, good growth, good dividend growth. So if you're looking for that kind of stability, the company has it too. But as it relates to Wealthsimple, this $750 million round values the company at $10 billion, and it increases Power Corporation's equity in it by 47%, and it will add 1% to Power Corporation's NAV. So this is really quite a darling story of Canadian wealth building and Canadian innovation. Wealthsimple is, and Power Corporation owns 55% of it. So it continues to fire on all cylinders and all its other businesses as well. So we like it here and we own it for our clients. Yeah.
All right, Diana, I got to leave it there. I'm out of time. Diana Avigdor, Portfolio Manager, Head of Trading, Barometer Capital Management.